On February 12th, 2025, Bloomberg published something that made my jaw hit the floor. A leaked memo, a classified document, passed around between Russia's most powerful officials inside the Kremlin. And what's written inside that memo exposes the biggest lie in modern financial history. Russia, the same country that spent 4 years telling the world the dollar is finished, the same country that held up a BRICS banknote on live television, the same country that screamed de-dollarization from every rooftop, that Russia is now quietly, secretly, desperately begging America to let them use the dollar again. But here's where it gets wild. While Russia is publicly crawling back to the dollar, they're doing something completely different behind closed doors. They're hoarding silver, $535 million worth, in a multi-year strategic reserve program. Let me say that again because I need you to understand how insane this is. The country publicly surrendering to the dollar is privately stacking silver like their future depends on it. Why? Why would a nation beg for dollars with one hand while buying physical metal with the other? That contradiction is exactly what we're going to unpack today. And by the end of this video, you'll understand something that 99% of investors completely miss. You'll understand how governments actually think about money. And more importantly, you'll know exactly what this means for your silver, your gold, and your portfolio. This isn't some political drama happening on the other side of the world. This is about your wealth, your purchasing power, your financial future. If you hold silver, if you hold gold, if you've watched prices swing violently over the past few months and wondered what the hell is going on, this video is going to connect every single dot. So let's get into it. Welcome to Finance Currency. If you're new here, this is where we decode the real forces moving your money, the information that mainstream media either ignores or gets completely wrong. If you find this valuable, do me a quick favor right now. Hit that like button. Takes 1 second, and it's the only way YouTube shows this to more people who need to see it. Trust me, every single person holding precious metals needs to hear what I'm about to reveal. Now, before I show you Russia's dirty little secret, I need to take you back to where this whole story started. Because without understanding the setup, you won't understand why Russia's current behavior is so shocking. Rewind to February 2022. Russia invades Ukraine, and the Western world responds with the most aggressive financial attack in modern history. They didn't send soldiers, they sent sanctions. First, they kicked Russia out of SWIFT. That's the global messaging system that moves trillions of dollars between banks every single day. Imagine waking up one morning and your bank can't talk to any other bank on earth. That's what happened to Russia overnight. Then they froze $300 billion of Russia's central bank reserves sitting in European accounts. Just gone. Locked. Untouchable. Then came the sanctions on Russian banks, Russian billionaires, Russian oil companies, Russian everything. The message from the West was brutal and clear. You're done. No more dollars, no more euros, no more access to the global financial system. Figure it out on your own. Most analysts thought Russia would collapse within months. The ruble crashed 50% in the first week. Russians lined up at ATMs. Businesses couldn't pay suppliers. The economy looked like it was heading straight off a cliff. But then something unexpected happened. Russia didn't collapse. They turned east. They turned to China. And within months, the Russian economy found a new lifeline, the Chinese yuan. Russia started doing all their trade in yuan and rubles instead of dollars. They built new payment systems with China. They created new banking relationships. And Putin went on television and made an announcement that sent shockwaves through the financial world. He said 90% of trade between Russia and China was now happening without dollars. By late 2024, that number hit 95%. By February 2025, it hit 99.1%. Let that sink in for a moment. 99.1%. Two of the largest economies on earth conducting nearly all their business without touching a single American dollar. Russia became the face of the de-dollarization movement. At the BRICS summit in 2024, Putin literally held up a prototype of a new BRICS currency, a new banknote designed to replace the dollar entirely. The message to the world was clear. The dollar's reign is over. We're building something new. A multipolar financial system where America doesn't control everything. And people who hold gold and silver absolutely loved this narrative. The logic was simple and compelling. If the world moves away from the dollar, everyone needs a safe place to store wealth. Gold fills that role. Silver fills that role. Central banks were buying gold at record pace, 1,037 tons in 2024, 863 tons in 2023. Gold went from $2,000 to over $3,100. Silver went from $22 to over $34. It felt like the easiest investment thesis in the world. De-dollarization equals precious metals moon. But here's what I've learned after years of watching markets. When something feels too easy, when everyone agrees on a narrative, when it seems like free money, you're usually missing something critical. And what was happening inside Russia, behind the propaganda, behind the BRICS speeches, behind Putin's confident television appearances, was about to blow up the entire story. Now stop for a second. This next part is the key to everything. Almost nobody is covering this angle. And it completely changes how you should think about both the dollar and silver right now. When Russia abandoned the dollar and embraced the yuan, the world applauded. Financial media celebrated it as the beginning of a new era. BRICS enthusiasts called it the death blow to American hegemony. Precious metals investors saw validation of everything they believed. But inside Russia, behind closed doors, away from the cameras, things were falling apart, and I mean really falling apart. September 2024. Russian banks wake up to a nightmare. They needed yuan, desperately, to pay Chinese companies for all the goods Russia was importing: machinery, electronics, auto parts, everything. But the yuan wasn't there. The overnight borrowing rate for yuan in Moscow shot past 200%. That's not a typo. 200%. Russian businesses literally could not get the currency they needed to pay their bills. Imagine running a company and you can't pay your supplier because there's simply no currency available at any reasonable price. That's what happened. But it gets worse. The big Chinese banks, the ones that were supposed to be Russia's new financial partners, started getting cold feet. Bank of China, ICBC, China Construction Bank, Bank of Communications. One by one, they started limiting their exposure to Russian transactions. Why? Because they were terrified of American secondary sanctions. See, here's what Russia didn't fully appreciate when they jumped into China's arms. Chinese banks want access to the US dollar system far more than they want Russian business. China does $700 billion in trade with America every year. Russia's entire economy is worth $2 trillion. The math isn't even close. So when America started threatening secondary sanctions on any bank that helps Russia evade primary sanctions, Chinese banks did the calculation and decided Russia wasn't worth the risk. Payments that used to clear in one day started taking 10 days, then 18 days. Then some payments just stopped going through entirely. Russian companies were stuck. They had buyers in China, they had sellers in China, but the banking system between the two countries was choking, and then China figured out something important. Russia had nowhere else to go. When you have only one customer, that customer sets the price. And China is not a gentle negotiator. They forced Russia to sell oil at massive discounts. We're talking 23% to 29% below what other countries pay. While the global benchmark Brent crude was trading at $80, Russia was selling to China at $58 to $61. They demanded Russian natural gas at prices lower than what Russians themselves pay domestically. Think about that. China is paying less for Russian gas than Russian citizens pay. And then in January 2025, China just stopped buying Russian electricity from the Far East region. No warning, no negotiation. Just we're not buying anymore. Imagine having one customer for your product and they hang up the phone. Russia went from being dependent on America to being dependent on China. And China wasn't being kind about it. But here's the part that really stings, the part that exposed the fundamental flaw in the de-dollarization dream. The yuan is not the dollar. The dollar works everywhere. You can trade it in Tokyo at 3 a.m. You can convert it in Sao Paulo on a Sunday. You can use it to buy anything from anyone, anywhere on earth. The yuan doesn't work like that. The yuan is tightly controlled by Beijing. Capital controls restrict how it moves. The market for yuan-denominated financial products is tiny compared to dollars. Russian companies were earning billions in yuan but couldn't do anything useful with it. They couldn't convert it easily. They couldn't get loans denominated in it. They couldn't hedge their currency risk because the market for ruble-yuan derivatives was too thin. It's like getting paid in gift cards that only work at one store. Sure, you have money, but it's not really money, not the way dollars are money. And the friction costs were eating Russian businesses alive. The ruble-yuan exchange rate was swinging wildly. 5% moves in a single day. Companies couldn't plan, they couldn't budget, they were losing money just on currency conversion before they even started doing business. Small Russian businesses trying to trade with China just gave up. The friction made it impossible to operate profitably, and this is the dirty little secret of de-dollarization that nobody wants to talk about. The dollar works smoothly, everything else has friction, and in business, friction costs money. Friction kills margins. Friction makes you uncompetitive. Russia learned this lesson the hard way. They left the dollar to become independent, but they didn't become independent. They became dependent on China instead. They traded one master for another. Except the new master knew Russia was desperate. The new master knew Russia had no backup plan. The new master had leverage that Washington never had. So by early 2025, the Russian economy was in serious trouble. Real inflation running 20% or higher, despite official numbers claiming 8%. Interest rates at 21%. The highest in over 2 decades. The central bank hiking rates desperately trying to control inflation, but in the process crushing every business that isn't making weapons. Oil revenues 25% below government projections. The civilian economy dying while the military economy consumed everything. Construction slowing, consumer spending falling, real wages stagnating. The war machine ate the economy, the yuan trapped them. BRICS delivered nothing. And the dream of replacing the dollar, it was turning into a nightmare. So what did Russia do? They picked up the phone and called Washington. The man running this negotiation from Russia's side is Kirill Dmitriev. If you don't know that name, you should. He's the head of the Russian Direct Investment Fund, Russia's sovereign wealth fund. Putin's go-to person for anything involving money and international deals. Dmitriev has been sitting across the table from Steve Witkoff, Trump's special envoy. And what they've been discussing has been called the Dmitriev package. Ukraine's President Zelensky was the first to reveal the scale of it. His intelligence services intercepted details of the negotiations, and what he shared publicly shocked everyone. The package is worth approximately $12 trillion. Let me put that number in perspective. Russia's entire economy produces about $2 trillion per year in GDP. This deal is worth 6 times Russia's entire annual economic output. It's the biggest economic proposal in modern history. Then Bloomberg got their hands on the actual memo. 7 specific proposals, and each one is more significant than the last. First, and most importantly, Russia wants to return to using the US dollar for energy transactions. The country that led the global war against the dollar. The country that spent 4 years building alternative payment systems. The country that stood on stage at BRICS summits declaring the dollar is finished. That country now wants back in. Let that sink in. Second, long-term contracts to purchase American aircraft. After sanctions cut off Boeing and Airbus spare parts, Russian airlines have been cannibalizing old planes to keep others flying. Pulling engines from retired aircraft, using parts well past their normal service life, Russia desperately needs access to Western aviation. Third, joint oil and gas development projects. We're talking about Siberian gas fields, Arctic offshore drilling, liquefied natural gas facilities. Russia is essentially offering America the keys to some of the largest untapped energy reserves on the planet. Fourth, nuclear energy cooperation. American companies could gain access to Russian nuclear technology and uranium supply chains. This is strategically enormous. Russia controls significant portions of the global uranium enrichment market. Fifth, joint development in artificial intelligence. The new arms race isn't just about missiles, it's about computing power and AI capabilities. Sixth, mining partnerships for critical minerals, lithium, copper, nickel, platinum, rare earth elements, the exact materials that power everything from smartphones to electric vehicles to advanced weapon systems. Russia sits on massive deposits of these minerals, and they're offering American companies access. Seventh, and this one is particularly interesting, Russia wants to partner with America to promote fossil fuels over the green energy policies that Europe and China are pushing. They're essentially saying, let's make oil dominant again. Given the current administration's energy policies, that pitch probably resonated, but here's the hidden sweetener that most analysts have missed. Remember that $300 billion of Russian central bank reserves frozen in European accounts? The deal hints that this money could become part of the arrangement. Some analysts believe this frozen money is the real motivation for the Trump administration to move quickly on negotiations. $300 billion is a lot of motivation. Western officials who've seen the full memo told Bloomberg something fascinating. They said several of these proposals appear specifically designed to drive a wedge between America and Europe. Think about it strategically. If America and Russia become energy partners, why would America care about European sanctions on Russia? If American companies are drilling for oil in Siberia alongside Russian companies, the entire Western sanctions framework becomes meaningless. Russia isn't just offering America money and resources. They're offering to rearrange global alliances. On February 13th, Russia officially confirmed the negotiations were real. This isn't rumor. This isn't speculation. This isn't conspiracy theory. It's happening. The biggest champion of de-dollarization in modern history just admitted they want back into the dollar system. The BRICS dream is dead. The de-dollarization narrative just got its legs cut off at the knees. And you might think this is bad news for precious metals. You might think this means the dollar wins and gold and silver lose. That's certainly how some people are interpreting it. But here's where we get to Russia's dirty little secret. The thing that almost nobody is talking about. The thing that changes everything. While Russia is publicly negotiating to return to the dollar system, while they're offering America $12 trillion in deals, while their officials are meeting with American envoys, the Russian government is doing something completely different with its own money. They're buying silver, massive amounts of physical silver, $535 million allocated to strategic silver reserves. And they're not alone. But to understand why this matters, why this contradiction is the most important signal in the precious metals market right now, I need to show you what other countries are doing when they think nobody's watching. Here's what blew my mind when I discovered it, and I guarantee nobody has connected these dots for you before. Russia, the same country negotiating to return to the dollar, has quietly started accumulating silver in its strategic reserves, $535 million worth, in a multi-year acquisition program. This isn't retail investors buying silver eagles. This is a nation-state building a silver stockpile. Now ask yourself a simple question. Why? Why would a country publicly say, we need dollars, while privately hoarding physical metal? Because governments don't operate on one level. They operate on multiple levels simultaneously. On the surface level, Russia needs the dollar for practical reasons. Their UN experiment failed. Their economy is struggling. They need access to the global financial system to survive. But on a deeper level, Russian strategists learned something from the past 3 years that they will never forget. The dollar is a weapon. $300 billion of their reserves were frozen overnight. Their access to SWIFT was cut with one decision. Their entire financial system was attacked with the stroke of a pen. The dollar works. But it can be turned against you at any moment. So while Russia needs the dollar for daily operations, they're building an insurance policy with something that cannot be frozen, cannot be sanctioned, cannot be deleted. Physical silver, physical metal sitting in vaults on Russian soil, under Russian control, beyond the reach of any foreign government, and Russia is not alone in this strategy. India has accumulated over 900 million ounces of silver through government and private purchases over the past 5 years. That's more silver than what's currently sitting in the LBMA vaults in London. Saudi Arabia has been building silver positions through ETFs and physical purchases. China's silver imports have exploded. In 2024, China imported more silver than ever before in recorded history. These aren't Reddit traders making meme bets. These aren't YouTube commentators with small stacks. These are nation states, governments with intelligence agencies and strategic planners and economists working around the clock. They're all coming to the same conclusion. The dollar is necessary for operating in today's world. But physical metal is the insurance policy for tomorrow's world. They say one thing in public, they do another thing in private. And if you're smart, you're watching what they do, not what they say. Here's what makes silver particularly attractive for this purpose. Gold is obvious. Gold is expensive. When China buys 200 tons of gold, it makes headlines everywhere. Everyone tracks central bank gold purchases. Silver flies under the radar. Silver is cheaper, so you can accumulate more quietly. Silver has industrial uses, so purchases can be disguised as commercial activity. Silver markets are smaller, so nations can build significant positions without moving prices too dramatically. It's the stealth asset, and there's something else about silver that matters tremendously. Supply deficits. The world consumed approximately 1.2 billion ounces of silver last year. The world produced approximately 1.0 billion ounces. That's a gap of 200 million ounces. More silver went out than came in. And this deficit isn't new. It's been happening for years. The Silver Institute has documented 4 consecutive years of structural deficits. Where does the missing silver come from? Existing stockpiles, above-ground inventory that's been accumulated over decades. But those stockpiles aren't infinite. Every year, the deficit continues. Those stockpiles shrink. COMEX registered silver inventory has dropped dramatically. LBMA vault holdings have declined. The available physical silver in the Western financial system is getting tighter and tighter, and now you have nations actively accumulating, Russia buying, India buying, China buying, Saudi Arabia buying. The supply deficit is getting worse, while sovereign demand is increasing. Something has to give. Either silver production increases dramatically, which isn't happening because mining investment has been terrible for years, or demand decreases dramatically, which isn't happening because solar panels and EVs and electronics need more silver every year, or prices increase to balance the equation. The math is simple. The math is relentless. The math doesn't care about Kremlin memos or BRICS summits or dollar diplomacy. More silver goes out than comes in. That equation has only one solution over time: higher prices. Now you might be thinking, if this is so obvious, why did silver crash? Fair question. Silver went from $34 to $30 in recent weeks, a significant decline. Here's what actually happened. When Bloomberg published the Russia dollar story, markets had a knee-jerk reaction. Russia wants dollars means stronger dollar. Stronger dollar means metals down. That's the simple surface-level read. And for a day or two, that trade worked. But here's what the surface-level traders missed. The same memo that revealed Russia wants dollars also revealed Russia is buying silver. The same country that needs the dollar for operations is accumulating metal for insurance. That contradiction tells you exactly how sophisticated actors think about this situation. The dollar wins battles. Physical metal wins wars. Short-term traders sold silver because of headlines. Nations are buying silver because of fundamentals. Who do you think has better information, random day traders or government intelligence agencies with billions of dollars at stake? I know who I'm following. So here's where we land. Let me be completely straight with you about what I see and what I think it means. In the short term, yes, the Russia dollar story creates some headwinds for metals. If this deal moves forward, if Russia actually returns to the dollar system, that's more demand for dollars. Stronger dollar typically pressures gold and silver prices. The BRICS narrative losing credibility removes one of the emotional drivers that brought new investors into precious metals. And if the geopolitical situation stabilizes, some of the fear trade that benefits metals could unwind. I'm not going to pretend these factors don't exist. But here's my honest assessment after analyzing all of this. These short-term factors are noise. The long-term fundamentals haven't changed one bit. Silver supply deficits continue. Getting worse, not better. Industrial demand continues. Solar installations increasing year over year. EV production increasing. 5G infrastructure expanding. Medical equipment requiring more silver. Sovereign accumulation continues. Russia buying, India buying, China buying. Nations building metal reserves because they saw what happened when the dollar was weaponized. U.S. debt continues. $34 trillion and counting, every year higher. No realistic plan to address it. Eventually that math catches up to the currency. Central banks keep buying gold, 1,037 tons in 2024. They're not stopping because Russia wants dollars. They're buying precisely because they saw dollars get weaponized. The fundamentals that made silver attractive haven't changed. What changed is the narrative. And I learned a long time ago that narrative and fundamentals eventually converge. But in the short term, they can diverge dramatically. Right now, narrative is negative. Fear is elevated. Headlines are scary. Right now, fundamentals are positive. Supply deficits growing, demand increasing, stockpiles shrinking. That divergence is an opportunity. When Russia is publicly chasing dollars but privately stacking silver, that tells you everything you need to know about how to think about this. Operate in the dollar system because you have to. Own physical metal because you're smart. That's the Russian strategy, that's the Chinese strategy, that's the Indian strategy. It should probably be your strategy too. Now, I need to address something directly. I know some of you are sitting on losses right now. You bought silver at $30 or $33 and watched it drop to $30. That doesn't feel good? I get it. I know some of you are wondering if you should cut your losses and move on. Here's what I would tell you. The people who bought silver at $18 in 2020 watched it crash to $12 during the COVID panic. If they sold at $12, they missed the entire run to $30. The people who bought silver at $30 in 2020 watched it crash to $20 in 2022. If they sold at $20, they missed the recovery. Every single major precious metals bull market has corrections. Sharp, painful corrections that shake out weak hands. The people who fold during corrections regret it. The people who hold through corrections, or better yet, add to their positions, end up very glad they did. I'm not telling you what to do with your money. That's your decision. But I am telling you that selling assets with strong fundamentals because of short-term news is usually the wrong move. Russia's dirty little secret tells you what smart money is actually doing. They're saying one thing for public consumption. They're doing the opposite thing with their actual reserves. Actions speak louder than words. So here's my bottom line. De-dollarization as a near-term narrative is wounded, maybe dead. The dollar won this particular battle, but the war isn't over. $34 trillion in debt isn't going away. Supply deficits aren't reversing. Nations aren't stopping their metal accumulation. The fundamental case for silver is completely intact. What we're experiencing right now is a sentiment reset, a washout of weak hands, a narrative shift that creates opportunity for people paying attention. Every major position I've seen sovereign wealth funds take in the past decade followed a similar pattern. Negative headlines create fear. Fear creates selling. Selling creates discounts. Smart money buys the discounts. Eventually, fundamentals reassert themselves. Prices recover and exceed previous highs. That's the pattern. And if nations like Russia are buying silver while publicly chasing dollars, that tells you exactly where we are in this pattern. We're in the fear and discount phase. What comes next is the fundamentals reasserting themselves phase. I know which side of that I want to be on. Now, I want to hear from you. What's your read on this situation? Are you buying this dip? Are you holding? Are you waiting for lower prices? Drop a comment below. I read every single one, and I'll pin the most thoughtful responses. If this video helped you see something you didn't see before, smash that like button. It takes 1 second, and it's the only way the algorithm shows this to more people. And if you're not subscribed to Finance Currency yet, hit that subscribe button. We break down the forces moving your money every single week. The stuff mainstream financial media misses or gets wrong. This is Finance Currency, and I'll see you in the next one.